start recording. So let's go down with time frames. So sell side targets, we have sell side under these lows, buy side we have in this inefficiency here created, dropping lower. Inside that 12-hour inefficiency, which I mentioned yesterday, as long as we're staying beneath that, we are bearish in here, in my opinion. We got that 12-hour inversion we're holding consequent encroachment of. If you drag that across there, trade under a short-term low, failing to displace through it. 4-hour, again, we're just trading under this low, failing to close under it. Hourly, we are inside of this hourly inefficiency over here, just consolidating within it. And then technically we have buy side above these highs. If we are going to go for a buy side draw, I'm not bullish in here as much, but these are just going to be here if order flow does want to take a measure of buy side, as sell side has been already engaged beneath here. Like something like that would be ideal, and then continue draw. Forex Factory C. Still only. I just like to check Forex Factory a couple of times. So that's Forex Factory today. So that's the news. And so here we just wait for 9:30. Oh, I'll just start from here. I paused it for a bit. So in high resistance conditions, you can see how we take sell side and then we take a swing high on a 1 minute. What do we instantly do? Return back deep into the range, cover these inefficiencies. They're not being left open. So we then consolidate within them, a lot of back and forth, overlapping. Notice how every single fair value gap is getting traded through constantly. Like I'm just going to mark out everyone here, and then you can see the overlap. You can see how we're just constantly trading back and forth in fair value gaps. I don't know where that came from. So we come just short of our target, return deep into the range. That's what is meant by deep retracements. Again here, fair value gaps that in a low resistance condition will get left open. We then trade into them, right? You can see how inefficiencies in there. There's a small one here, just gets overlapped. You can see within this run lower, you can see we originally trade into fair value gap and trade lower, and then instantly return back into it. These are just signatures of high resistance conditions, or more high resistance than low. For example, a fair value gap here, return into it, trade away from it, come back down into it, trade up higher. You can see how inefficiencies in here. I'm just going to kind of draw them out, not perfectly. Like how we're constantly trading within the ranges, coming back into them. So study the difference between that and low resistance conditions. So at a low resistance run to current price, I would use that run, but we covered it yesterday. So these are the two runs today, isn't it? But whereas on the sell side of this curve, once buy side is swept, notice every single inefficiency, how little time we spend in them. And we don't even get up to them at all sometimes, right? We're not constantly returning back to them. So we're tapping into them and expanding away. That's low resistance, right? So in here, for example, is a first sign of a potential more, like, you see how all these candles are confining a range together in here. On a 1 minute, that's going to be hard to trade, right? Like, you're going to notice fair value gaps overlapping, being more high resistance. Like, we're just trading beneath fair value gaps, above fair value gaps. There's no clear draw, right? I'm low-key bearish, but like I've said, everyone is bearish bias right now, so I don't want to be bearish bias anymore. Like, if everyone's bearish bias, it just, like, I just don't want it to go lower at that point, because if everyone is bearish bias, it most likely means you're wrong, because 90% of traders fail. So again, it'll be, I would see if we trade up to this buy side, I would see how we trade up there. If we displace through it, then obviously next buy side targets. If we trade up into that high, then I would want to see if we sweep into it, and then in there, potentially a model to lows and our bearish targets. But again, I just wait till 9:30. I'm not rushing to be in anything. Very nice. I have no clue what them levels your draw there. I'm sorry. Well, a range is determined, and like, a range is a range, right? It's just the difference between a high and a low, or a PD array and PD array. So, for example, the shorter term dealing range, right, is this from high to low. The longer term dealing range, what I've got on my daily chart, is that. So you're just marking ranges on different time frames between different highs and lows. Usually a range has to be defined by it taking out a high and then taking out a low, and then at that point that dealing range is created. It's the dealing range, right? So that's how a dealing range is created, with a liquidity sweep on buy side and sell side. Of this internal range, if we're looking at this here, we're in a premium, right? If we're bearish, I don't really want to see us trade up into these higher buy side levels. So within this current dealing range here, we are in a short-term premium. So if we are bearish, shorts in here would be more favourable than obviously down here. But then that doesn't discount that we have higher targets if we are going to explore above a high, considering we've got 930 volatility, right? I need to sort my mouse out. My mouse ain't working. No, this is a different one. I've got like 4. I just switch. It's like keyboards. Every other day I want to change my keyboard. That's the keyboard I'm using. It's the most easiest to use in terms of you got screenshot buttons, so on and so on. so it's a bit more friendly. And then the other one is a obviously I don't have that much LEDs on. I think I would have epilepsy. I don't have rainbow. Hey, we've got max people in the stream. That's the only thing I don't like about Coffee and Chill. We can only get 50 people in stream. I don't think I can increase it either. Bit rate user limit. We got 2 minutes to open. Let's just look at the contrast. So they all have the highs up there. I would kind of want us to poke them to these highs. Counts, just in case. Iterate website. Dodgy is in premium channel now. Give it there. We want all of the charts up. Yeah, and buy side is a bit suspicious for me still. We just run to buy side. You can see that from sell side. That internal high, and then beyond that is that buy side. So you'd want that buy side to be engaged within this candle or the next 1 minute candle. Watching a sold candle high. It's an immediate rebalance potentially. That's if we are still bullish in here. A measure of buy side has been taken now. See if we use this down close candle now. So now see how we respond to this internal high. You would want speed through that. Okay. So this retracement just shy of that high. Mention the next candle of the one after should trade into that buy side. And just for obviously execution again. Yeah, I'm sorry if the stream's full. We return down into this fair value gap lower time frame, or just short of it, sorry. Bullish fair value gap in there, going long. Every opposing candle supporting price higher. Into buy side. Above that high. No, not above that high. Above that high. Yeah, but it was based on my 1 minute opposing candles in terms of that. So if we look at that on a 1 minute, right, we're trading down. Sorry, let me do this. Let me just go over this quick. So sell side engaged. Yeah, you can see failed to close under. We then instantly run above this down close candle. Create another down close candle here. So we're creating down close candles while going higher. Then on a 15-second, I'm looking at this price run from premium to discount of that existing price fountain. Where's equilibrium? There. What's in equilibrium, or just beneath equilibrium? A bullish fair value gap. So out of that, I'm looking for a market maker buy model on a lower time frame. So we have a sell side of the curve, buy side of the curve. So we create a 5-second fair value gap. Entry on that. Stop under for fair value gap. Target the high. And at that point, every single opposing candle should support price higher. Right. So that's that. And obviously, if I'm holding and like trailing my stop, like I always mention, above that high, what I will do is every single down close candle that we close under, I would then just trail my stop under that. So for example there, for example there, for example there. So I most likely would have got trailed out here. So my stop would have got moved to here. To here, these lows. And then once we close over the body there, it would have been tripped. Go back to higher time frames. So you can see the bullish order block there. And this is exactly what I mean when, even though I'm bullish on a lower time frame, when everyone, or bearish on a higher time frame, sorry, when everyone is bearish, I don't want to be bearish. Do the opposite of everyone else. Like, and especially looking into open, we took sell side already. You see how sell side in here was engaged? We engaged sell side, returned higher. Then, what are PDRAs doing? Are we respecting premium fair value gaps? Are we respecting discount fair value gaps? Well, here, you can see how we're finding sensitivity out of consequent encroachment of that bullish fair value gap. Here, we're failing to get beneath it, leaving some of it open. Displace higher by the Iran thing. Take short-term highs, create relative equal highs. I mentioned they're suspicious at 9:30, when we were at 9:30. You can just watch the recording back. Then we trade lower into sell side. Fail to close the entire gap in beneath here, so it leaves that range of a fair value gap as a breakaway gap. Then we expand higher. Failing to get above that high in that price run, then return to a discount of a range, 15-second fair value gap, 1 minute order block, and then we displace higher in a low resistance run, right? So if we study that price run like I'm always doing, notice on lower time frames, every single down close candle which gets closed through supports price higher. Mark out a high there. Beyond that, we got buy side up there, buy side here. It would have been ideal if I held a runner. But more interested in one hit run, not one hit wonders, more base hits. Yeah, I'll trail my stop up OBs. For example, in here, if I'm entering off this bullish order block in here, for example, my original stop's under that, targeting wherever. Then once we close over this bullish order block, then my stop will get reduced to beneath that candle. Then, in here, if we create a bullish order block, then I would keep reducing it. I'm not done for the day. I may be done on my live account, because there's no reason to trade again after a 2R. Below the wick. What up? How you doing? Bye-bye. Doing good. Yeah, I'll show you. Oh, a second, let me out on my live. But this is a low time frame. Like, obviously I trade a bit lower, but based on 1 minute idea, sell side sweat, buy side above. So when we tap, or I'm scaling down all the way. So we trade into a 1 minute order block. Then we trade into a 15-second fair value gap, which is discounted for range. Then I enter on a 5-second fair value gap. Sorry, just keep slowing down. Yeah, here, that's clean. Yeah. Where's my main chart? I'm always looking at this, basically. I have this on one of my monitors. So I'm kind of a 4. This one. Or loads. So I'm looking at, so these are just the 4, 3, 2, 1, 30 second, 15 second, 10 second, 5 second. But every so often, like every half hour or so, I'll flick between all of the higher time frames than current. So that goes from monthly to 4 hour on this one, 1 hour to 10 minute, and then that's the lower time frame, which I always have pulled up. Like the high time frame PO3 kind of thing. This one, like this one, kind of like that, but it's by Faddy or Faddy. Yeah. Yeah, I'm bearish overall. I just don't like. I don't like to be bearish when everyone's bearish, because in most cases I'll be wrong then. Like this run higher was nice though. The Iran news or whatever. It does, yeah. Especially with 15-minute here. If anyone's wondering why they can't speak, you have to turn on push to talk, I'm pretty sure, to speak. But it's just mainly because there was so much hot micing. I just don't want to go into the stage above when what's it called? When Dodgy's in there. I don't want 2 stages running. Charts. Serving capital. Like break evens early is really nice when we get momentum. You want to see speed. see our 2 minute immediate rebalance. We're also trading into a 1 minute fair value gap. So we're leaving a 2 minute breakaway gap at the inversion, then have the immediate rebalance on the 2 minute, and you got that breakaway gap there. Same, I took partials there. I'll move lower. This 5 second fair value gap was my entry there on fundeds. Into this low. That's where I took 2 contracts off there in here. And now 2 is holding to that low. With stop break even. So we trade into this inefficiency. I'll get down as well 1 second if you want. Now I'd want it. Now I'd want every single opposing candle to support price lower in here once we close under them. Now they should be used as bearish order blocks into. We'd want speed under this low. Any up close candle in here, you would want it to close through quickly and used as a bearish order block. Seeing this fair value gap in here. Good. Yeah. That's the first sign of potential consolidation or short-term retracement. Our order flow switching on lower time frames. 1 second. Yeah, we'll go on in 1 second for this price one. You see 1 second fair value gap. Staying in the upper portion of it, and then we run for liquidity. I am stopped. Break even there on the remaining. This will most likely print lower now. Speed now. And there's the speed. So let's get the executions up with this. Yeah. Immediate rebalance on here. So original short in that 5 second fair value gap, like mentioned, covered at this low. Once we're creating a short time low in here, just shy of liquidity. I just like to do that. Then I get stopped, top ticked, like always. Then I was happy to put the same risk on once we were closing under this 5 second fair value gap. Wanting low resistance. That is definitely the wrong tool. Targeting sell side, and then obviously we expand quickly. That's good. Good job, Janko. And that's all off a 2 minute immediate rebalance. So again, like what I always mention in terms of low resistance runs, study this run here. Like what I mentioned with, let me just get the characteristics of low resistance up, because I may do a video on it at some point. But this is characteristics of low resistance runs, right? Price is in a hurry. Are we leaving gaps open? Are we printing one-sided candles, for example? When we're bearish, are we making little to no up-close candles? Are we having minimal retracements, for example, into premium arrays, so fair value gaps, order blocks, breaker blocks, so on, inversions? And is there any overlapping candles? Right? So you can see on lower time frames, like I always mention, this is kind of my model, and you can use it with inversions, but every single up close candle, once the swing high is taken, notice how it supports price lower once we close under it. And then you can look for your lower time frame entries within the them red lines. And that's where my entries are occurring. For example here, this 15 seconds, once we're closing under there. Once we trade into the 1 minute order block. So yeah. And then sell side draws are, if I go to my daily chart again, I'm obviously looking for these lows. Are we going to get them today? I don't know, maybe. But I'm not needing it to do that. Like, I'm trading the intraday strings. I'm not trading 300 points, sorry, or 400 points to daily levels, but I'm trading towards them. Like, my highest risk trades are going to be short. So, for example, on this 5 minute chart I mentioned in here, study this as a high resistance condition before market open. You'll see on a 1 minute chart it's so difficult to trade in that. Whatever your entry model is, no matter how profitable you are, like dodgy, reliable, anyone who's profitable will struggle to trade within them ranges on lower time frames and get models that will expand quickly. Whereas on here, when we're creating imbalance, we're creating inefficiencies, that's when the market's going to start spooling. And whatever your entry model is, they're going to play out quickly, and that's how you know that you're on side. When we're leaving gaps open, we're having immediate rebalances, for example, that 2 minute. We're displacing through swing lows. We're having little to no retracement into premium of ranges, which gets created. Why can't I stop my position? Yes. Okay. So, for example, in let me just get an example quickly. Sorry. 1 sec. Let me go. I just want to get an execution because it's better to show. Yeah, that's a really clean one. Let me run that out quickly. But my reversal model of it, right? Let me just, there would be a good example somewhere. Sec to find it though. But I mentioned this, for example, yesterday, right? Let me just mark out the levels I have marked. So we traded into that sell side, right? Let me clear all of this. We had a 15-minute fair value gap. This is a long inversion. As soon as we create a down close candle or an up close candle, right, towards our draw, so when bearish, you're going to want to see once that closes, when we close beneath that up close candle, you want to see that support price lower continuously if we're expanding lower. So that would be a order block, right, if I was bearish. But as soon as we close back above it, that becomes a breaker. In terms of that is your smart money reversal of a market maker buy model. So my entry would be any opposing candle based on that. So for example, these series of candles opposing. So if order flow is switched to bullish, any down close candle which gets created now, that's like your breaker, that's your change in state, that's your inversion, that's like your low risk buy, right? Of a market maker buy model. And then my position, my continuations would be any of these up close candles in here. But that is the reversal point. Like if you look at that on a lower time frame, I went over this yesterday. Yes, basically. Like any candle, and then I would pair it with, for example, a 5 second here. There's no reason for us to go lower in here because you see this price run. We rebalance into what is like a mitigation or breaker in here, into a fair value gap, leaving breakaway gaps. in here we have efficient price delivery once we're above this range. So we've had, from this high, we've had sell side delivery, then buy side delivery back through it. So at that point, this range is a balanced price range. And then continue trading higher. But like, I've kind of created it off like all of ICT's teaching, in terms of I've got so much videos from him just saying that. Like if you got audio on my stream, I'll just play it on a different monitor quick. Like, yes. So the model is essentially the same as Dodgy. Yeah, it's technically every entry model is the same. I'm entering basically at the same time as Dodgy, and any other trade at any other model, I'm basically entering at the same time. Like I always say to people, it's not what you enter on, it's the draw and what market we're trading, because we're all trading towards the same draws, right? So you just need to find a PD array which resonates with you the most. And for me, opposing candles was like, I still use inversions. Like all the backtesting sessions I've done in here was just inversions, but the whole draw is the exact same. For daily, in terms of a daily, I'm looking at bearish, right, overall. So that's where my bearish bias comes in. But then that doesn't stop me marking out buy side draws, right, if price is expanding above old highs. So beyond here, I would want speed, basically. You want a low resistance run through that entire range, and obviously that's a quite large range. Yeah. Yeah, it does. Like what I'm looking at is, I find it kind of hard to explain like on the stream, because I'm literally like a 5-second chart. I can't, like, I just see it. Like it's came to not pattern, it's kind of pattern recognition in terms of what I'm looking for. Like my brain processes it quicker than I'm able to say what it is. So opposing candle. Yeah. So for example, in here, if I'm short in here somewhere, right, every time we create a opposing candle, my stop is technically going above that. So for example, in here, if I'm short here, once we create these up close candles, my stop is above this swing high or these up close candles. And then obviously I'm taking into account. Yeah. Yeah. If that was my entry, but and then opposing candles. Yes. So that's exactly why I'm looking at this. Usually I would be fine getting stopped out. Like I would just move my stop, right? I would keep my stop in place because that's a model, right? But then a re-entry, for example, with 1 second, I just don't want to. For example, within this, right, my stop is going to stay in place where it was at the entry price, even though we can still come up to that entry price and use that as a premium array and continue trading lower like we did, because on a 1 minute, the opposing candles here, we're trading up into them. But I just leave my stop there, and if it allows a reaction from that range where my entry was, or a premium PD array, like I'll look on the lower time frame for a confirmation, and as long as I'm not over risking, that's the model, right? So, and then beyond that, like, what's that? Yeah, like, what's it called? Everyone always says that's a mech model. Everyone says mech model, mech model. I have no idea, but that's fine. When I say when I say opposing candles, like I'm just saying opposing candles because for the beginner it's so easy to understand. Then order blocks. Like, that's how I make, like, that's literally how I read order flow. Like, that's why I can look at the 5 second, even 1 second in certain price runs. Like, in a low resistance price run, every fair value gap will support price lower if we're bearish. Every inversion will support price lower if we're bearish. Every order block will, every volume imbalance, every breaker block, every single PD array will support price if we are in a low resistance run, where we're not just chopping with inside a range. So okay. I don't. So this is an example. This is literally what you're talking about with a universal, right? From my model standpoint, where we have we trade into this low, right? We have an opposing candles there. We close over them opposing candles, or at least the bodies, and then we create these down close candles here. So that's your change in state. So then I would look for, yeah, so let me do it on this execution. So then you got that 30-second fair value gap we're trading into, right? Then scaling down onto a 15-second, we close over, or we obviously respect 50% of that, and then obviously the 5-second fair value gap in here, we're trading into midpoint, leaving some of it open, so that's still bullish. Then, so then we close at the high of this bullish order block, because you want down close candles to support price higher. Then I enter long as soon as we open that candle, tap in and start trading away into that 5 minute. That's your internal model, right? So personally, my stops are beneath these lows. Yeah. Yeah, exactly. And then if we want to get technical with it, like, notice within this price run from that from the 15-second fair value gap, or you can see 5-second there, right? That was my entry on my live account, basically the same idea. Then we create an opposing candle, close above the range, use it as support. Then in here, let's take execution off for a minute, we get an immediate rebalance, we trade higher. So no inefficiencies are getting created, right? So if we're bullish, we're going to expand then. The market's going to be in an expansion profile because all the inefficiencies within that price leg has been traded to. So if we're bullish, we're going to start expanding. And then that's off the, obviously there, that was my exit of that. Yes. Exactly. For P&L wise, someone just asked, with them just scalps, right? That's that. Right, that's just scalping on the lower time frames there, and that's not including my live account. I'm not going to show my live account because that's personal stuff, I think, but so funded. I agree. When we have a clean run like that, higher, like from open, we have that clean expansion higher, and then we have a clean expansion lower. There's 2 price moves you could have potentially participated in. At that point, the market may move into some sort of consolidation. So, but again, for any shorts, right, you want these upper 5 minute fair value gaps here to be left to breakaway gaps. You don't want any of this range up here traded to if we're bearish, because price has been efficiently delivered through there. We've had buy side, sell side delivery. So then that range becomes a breaker in terms of that. You've got an inefficiency. We'll create a 15-minute here, which you won't want to see us trade much above that. Yeah, I agree. Because we got a daily above us, haven't we? But again, I would rather that stay open if we're bearish. That 1 hour closed really nice though, didn't it? If you look at the 1 hour candle. Well, I don't know if Dodgy's still in his options. I'm guessing he is. So again, like what I would need to see for like a high time frame reversal, like you mentioned, that 5-minute fair value gap in here. Like as long as we're respecting that, we are bearish. I'm not going to be looking for longs. Intraday scalps like the one I just did, which was literally happened within 10 seconds, less than 10 seconds. Right, some prop firms won't like that. That is trading to a sensible premium target from, because all the market's doing is trading to a discount, which is these old lows pre-market. Then it needs to return to some sort of premium. So then that's where I'm scanning on these time frames. So I scan from, actually let's just do it on this one, it's easier to see. I do this. So what I'm doing is go from 10-minute. Then once we take that low, I'm scanning for potential premium. So there's a 10-minute fair value gap. This is just going down. You've got the 8-minute fair value gap, which is at candles high. 7-minute fair value gap there. 6-minute fair value gap. So inefficiency in there. Inversion here. 5-minute fair value gap is all aligning with the same price level. 4-minute is a small inefficiency, which is the same as the 5-minute gap. 3-minute. 2-minute, 1-minute gap, right? So that is a market maker buy model in itself. So on a lower time frame, you get your market maker buy model. With relative equal highs created, sell side purged, breaker, smart money reversal, fair value gap. So this is your first sign of order flows shifting once we close over up close candles. So you see this price run lower on a 5-second chart here. Notice how every single up close candle supports price lower. Here there's a small one which doesn't, but I'm not taking too much into account. But you can see everyone supports us higher until we fail to displace, and then we close above them up close candles. So then that sets the stage of that's a bullish breaker. Then you look at down close candles. Do we start supporting price higher? Let's box them. So then does down close candles start to support price higher? Technically it's that entire range. There, yeah. Here, yes. Well, yeah. But, hmm? And look at the 1 minute. No, like that's why I didn't enter down there. Like I'm just monitoring. This is just what I'm monitoring and looking at. Like in terms of opposing candles, are down close candles supporting price while we're trading higher. Yeah, that's all it's doing. How do you know the price can completely reverse. Like neither ES or NQ took yesterday's liquidity, though NQ came close. So I thought the IFG would be a trap, that price would come higher. Like I mentioned in here, I'm not like I didn't short towards this high. I didn't short until around here, right? So that entire price range, I was letting price run because I want to see if the market shows its hand that it's bearish or bullish. Like if we were bullish, we would respect the 2 minute fair value gap, we would respect the 1 minute fair value gap, we would respect this 1 minute down close candle. We would want to trade above bearish fair value gaps as quick as possible. And then once we fail to do it there on that immediate rebalance on the 2 minutes and we trade away, that's setting the stage of this low at least as a discount target. So then that's when I'm looking for my entry model based on, for example, on the 1 minute there. This 1 minute opposing candle allows for a 60-point run. So then I'm scaling down into lower time frames where that price delivery occurs. You can see what I said in there for consolidation. Trading through, yeah. Like all the like traders are doing in terms of ICT concepts, if you're looking at them, you have to just always have conditions in your head. If we're bullish, this will hold. If we're bearish, that will hold. If something happens, then this will happen. Like ICT explains it as, because in computer science, when he codes stuff, if-then statements, right? If this happens, then that will happen. If this happens, then that will happen. That's all it's doing. And that's what everyone should be just scanning. And it takes obviously time. Like you're not going to do that in your first year of trading, right? You're not going to. Like the first year of me trading, I didn't execute at all on fundeds, live, evals. I didn't take a single trade. I was just studying. So, time frame do you use to determine high or low resistance conditions? Well, it's not a specific time frame, right? Like there's not one time frame that determines it, but genuinely if higher time frames start overlapping itself like this, where candles are overlapping previous ranges bodies, for example in here we're overlapping previous range bodies, in here overlapping previous range bodies, in here, like if we're not displacing and creating inefficiencies on a 5 minute chart or a higher time frame than you are on, then lower time frames are going to be more challenging to trade. If we're not displacing, we're not creating any inefficiencies, the lower time frames will be more choppy and a lot more back and forth, where we return to PD arrays constantly, we return to fair value gaps, we return to order blocks once we've already traded to them. That's high resistance. So if we're expanding, for example here you see a clear displacement away on a 5 minute chart, then you can expect the next candle, once it opens, any trading higher above the opening price is your manipulation. So you can look for short entries within that if your model presents itself. It's like a daily chart. ICT always says you want to be buying above the opening price if you're bearish. He does that to every single time frame. That's what he's scanning. Every single time frame, where every single candle closing on a time frame, you should refer back to that time frame. So every hour, when that candle opens and closes, you should refer back to it. Every 30 minutes, when that candle opens and closes, you should refer back to it. 15 minute the same, for 5 minute the same. That's why the macros are at the first 10 minutes and last 10 minutes of every hour, based on the hourly candle closing. think about when we left buy side at 9:40 before it reversed. Yeah, nice chatting to you. I was going PM session, but I can't. In here, I potentially could have still looked for that buy side, right? Why is that buy side less reasonable to start with? Well, that high was, if you look at that range, we're inside that hourly inefficiency. That high was created basically at the high of that inefficiency, right? Or at least the high of this inversion. So potentially it could be a protected high. You could say the same about this high, right? But there's still a remaining portion of this fair value gap which hasn't been traded to. If we go back in time for a second to here, right? If what we did was, for example, that, and then maybe set up something on a lower time frame like that, then I would look for higher prices. But we never did that. All we did is expand straight through. I'm going to go 5 seconds at a time. I don't know how to speed it up. But what we did is instantly expand through it. So there was no opportunity for a run higher. And if you were long in here, right, anywhere in this run, that's just a stop out, right? It just didn't reach your target. You showed to a partial is inside of this range between these buy side pulls. But that's just wrong bias or leaving them highs for a later time. I was going to mention something about this run here, or when we closed above this down close candle in there, but we didn't take sell side, so it's a bad example of that. But like you can see, once we took that, once we create this breaker here, we trade just outside the lines of it a little into this inefficiency, consolidate within it, and then we start spooling in here. When the market's in a spooling characteristic, where 1 minute candles are constantly printing higher, that's when you get them opposing candles. So there, up until our premium, right, of that range. Look within that range there, what's been efficiently delivered. So if we go back to the point before, where a dealing range is defined, you got buy side swept there, sell side swept there. So that's your new dealing range. Where's premium? Where's discount? So we trade to premium, fail to make a new low, and then return to the upper portion of these inefficiencies. If an S&T forms at draw and liquidity, is the draw at draw and liquidity? It depends on what it's showing. Like, I don't personally use, I guess, S&Ts in such a way of, if I have, for example, this low as a target on NQ, if we create an S&T when we're around here, I'm still looking for that draw and liquidity on that stack to be traded to. But for example, if it's like a longer term S&T between like lows like this, then that might have some impact. So again, in here, once we create this high, in here, we create a short-term high. So we close under this up close candle. Notice us retracing in there to a short-term discount, this fair value gap, right? Notice every up close candle, supporting price lower into that inefficiency. Then what do? Return to a short-term premium. 15-second fair value gap, I'm guessing. Yeah. And continue trading lower. Now you want to see how we respond at that low. Now I would monitor whether this inefficiency here gets used as inversion, or basically how we trade through into this range. So if we're bearish, you want to have this be using or inversion characteristics as we enter it. You don't want to see any discount sensitivity on it. So then I monitor on lower time frames. What are we doing up the upper quadrant of it? Are we closing beneath midpoint of it? So currently we're failing to close under the upper quadrant. Now we close under this range. Now you want to see if we closed under the upper quadrant. Now you want to see if we stay within the range of the fair value gap and trade towards the midpoint. It's just all conditioning factors, what I'm looking at. Then now we're traded to midpoint. Now you want to see what we do. Midpoint of our 1 minute fair value gap. You see you have the reaction from midpoint. Then you would monitor potentially this 1 minute fair value gap. If we leave this as a breakaway gap, that's really bearish. So if we leave that 1 minute fair value gap here as a breakaway, that's really weak. But what that needs us to do is close under this low. Now to see what we do with these up close candles. Now we closed under them, displace into. Now we're at the low of a fair value gap. You want to see what we do under there. So then monitor on lower time frames. If bearish, I would want to see this fair value gap used as a premium array. And then you would want these up close candles to be closed under quickly. Still failing to displace beneath the low of a fair value gap. Notice the 1 minute breakaway gap, which we mentioned. That should stay a breakaway gap if we're going to this sell side within this price run, if it's a low resistance run. Notice the 1 minute hasn't closed under that 1 minute fair value gap as of right now. Beyond this high, or beyond this inefficiency, this high, if we manage to trade up to that, that would want to be a turtle soup. So we haven't closed beneath any up close candles within this consolidation. So see if we stay in the lower. I'm going to remove some annotations here just to make it clean. Now we traded the upper portion. Now you would want to see whether this immediate rebound supports price higher, or whether we are respecting this fair value gap. So this is the first sign of potential order flow shifting. Opposing candles getting traded through. I'm just going to mark out this sell side, sorry. And then, so the 1 minute breakaway gap could potentially be a target in here. If we can get back above the inefficiency. So they're the premium, that's the discount. Once we get beneath, if we get beneath these lows, you want to see speed. But currently we're still in the range of about 1 minute fair value gap. I would rather if we trade to this low, we get speed. So see how we respond to have a lower that 1 minute inefficiency. Now see if we use it with inversion. Let's see how we trade into that low. Now, preferably if we're bearish in here, I would want us to stay beneath the the consequent encroachment. Any run above that, then order flow may be targeting this inefficiency. Might get off for 5 seconds because people are lost. And it's starting to overlap a little bit in here. So still haven't closed under that 1 minute fair value gap, but you would want it to be used as an inversion already. Now you would want to see how we trade at this short-term low. Just place through it. Back into range. How we're trading under this low and wicking back up. The lower time frames. What I'm looking at is this high. How we trade into that high and trade down. So now between these lows, you would want speed. Once we trade through that range, if we do, you want to see speed. The midpoint of this lower time frame inefficiency. Closed at it by visually looking at it. Closed above it. We have to include the volume balance. Looking at there. Let me of that. So once we trade into that low, you want speed through the entire. Okay. This is going to be messy, but I'll show you an example of trading at, right? So I outlined everything there, what I was looking at. I mentioned this title suit, which was quite nice. But if we then look at that, funded. This is the same funded account. We're just It's the same one since there. I haven't took anything since that short, that long. In here, going short within 15-second fair value gap. My stop break even gets top ticked. See the top tick there? I go short again once we get 5-second fair value gap in here. End this up close candle. Partial one off there of the 3 contracts. Get stop break even, top ticks basically again. Go short again once we're closing under or trading under these up close candles. So order flow switch to bearish again. Take one off once we're creating a swing low in them up close candles. So I take one off there. Weather the retracement, stop break even. Mentioned this fair value gap, which I was looking at. Then full TP at that low. So that was a more high resistance run within that price delivery. Within here, it was more choppy, right? It's a low resistance run if you're looking at on a basis of the expansion moves, but we accumulate within this inefficiency in here. So if you mark high to low, this is the inversion I drew out, and it was on. I said before we even touched into that, I would want it to be used as an inversion. In here, I said I would already want this fair value gap to be used as an inversion. Notice how when we come into that fair value gap, we don't leave the high of it. We leave that breakaway gap. We trade to the high one more time, then close beneath consequent encroachment. Then the algorithm has a new reference point of consequent encroachment. The algorithm will not let price close above 50%. So you can see the bodies in there respecting. The wicks are doing the damage. So on a 5 second, that looked like this. Right? You can see PD arrays created at consequent encroachment. So there's a small fair value gap in there, which I'll mark out because it will be a reference point. Notice how we use it all in here. And then this fair value gap. Notice how we use that once we're beneath it. Coming back up into it. That's the short-term premium, add consequent encroachment. Right? Then we obviously trade lower. Have that turtle soup scenario, which is a higher time frame for institutional order for entry drill. So for example, for 30 second fair value gap, there'll be like a institutional order for entry drill on a time frame I can't personally get, and then we trade to sell side and we get speed through that range, right? So on that scalping account, that's the P&L now. And that is a funded account. I don't know if this shows anything. It's a funded with Lucid. I don't know if that shows anything. I don't know, because some firms have different account titles. But yeah, that's just me scalping. Like I always say I can do hundreds of these trades a day, right? There's hundreds of opportunities. Like the short, original short. Okay, let's show all the trades. Original stop out here. Going long. Opposing candles. We then trade to sell side under these lows. Go long again once we close above this down close candle. Stop under the down close candle. Trade higher. Take profit. Then I took the live account execution from here to there. Then I try to go long in here. Get stop break even. Try to go long again in here. Small loss, so that's a 11-point loss. Then this win was 2 contracts was for 50 points. 2 contracts was break even. Here we 40 points. Here was 20 points. And here's break even. 20 point, 1 partial break even. 30 points, 1 partial, and then 66 points. I am here every AM session. And then on my live account, I can show it. This is the entire day. Again, I'm not showing you a live account P&L. I just don't want to. But you can see how that's literally one trade in the day. What I showed earlier. I don't have a course. But that's my one live trade of the day. Just one shot, one kill. Make ends meet. And that's that. This video will be shared on YouTube. If you know, you know. I've been watching too much ICT. But yeah. But I hope that was half insightful. But like this is the exact same. I know I don't really want to show it in here, but for example, how I use this inversion, right, and what I want to see happen. Wait, it's the exact same we used on this one when we were in Coffee and Chill here. This fair value gap. Before it goes into it, I mentioned here. One sec. Look. So before, that's what you want to see. And it's the exact same logic I used in here. If we're bearish, we have various equal highs. We've traded into a premium of the range and then an efficiency and then had a sharp rejection from it at the opposing candle supporting price lower. So, yeah. You said, if you go to my, I don't like promoting the YouTube, but Dodgy doesn't allow me to have any other way to share. Yeah. If you go onto YouTube connections, go onto there, and it's that one, bank holiday. And that's the whole stream from yesterday. Oh no, I hear ICT. I don't get anything from being in here. Like, you think I'm I'm not part of Dodgy's team one bit. Like, I do this out of my free will. Because when I was in here 3 years ago, I would have wanted help as well. Like, when I started 3 years ago, I was in that Discord. I paid about $100 for lifetime for Dodgy's premium. I'm still got that now, right? Now it's $100 a month. If it was $100 a month, I definitely wouldn't have done it. It's just out of my budget. How come there's no voice call anymore? What, that you can talk? I turned it off just for people wanted it off today, or like people were saying in terms of it was way too distracting with background noise, so I just disabled. If you want to speak, I can let you. I think you can still speak. You just need to turn push to talk on. I'm pretty sure if you turn push to talk on, you're still able to speak. But yeah, you can see as soon as we trade to them those, we go into time distortion or consolidation. It's just not times I want to trade. That's nice. Yeah, this is literally exactly what I used to do. It's so nice seeing it in terms of how I used to annotate charts. Crazy. Nice job. Anyone know what broker that is? Where did he? That's mine. Shit. Nearly. What that? Oh, well. Oh, look at the prices. What about it? Lost. No, that's fine. I think. Well, I know you can't like buy futures. You can't. Okay. I'm gonna. What I'm gonna say with that is, you see how every one contract. Look, I'll explain this. I think what I'm saying is right. You see the one contract sales are at an even price, right? That's at an even price. That's an actual trade. What this is doing when you're buying 2 contracts and selling 3 contracts, right? That's the average fill price. So one fill may have been at in 25 p interval lower, or 25 pence interval lower, and the other one may have been a 25 pence interval higher. So it's averaging the fill price. Cent. I'm pretty sure that's what it's doing. So I'm not going to investigate it too much, but so again, this is just what I'm like. I'm not taking a trade on this, right? But it's kind of just what I'm viewing on my other monitor right now. I'm just looking at opposing candles. Are every opposing candle supporting price higher? So it likely means order flow is bullish short term. So where are we reaching for? Maybe just 1 minute fair value gap, right? Or the 2 minute looks more viable. So once we create this new low, when the new dealing range is presented, so we've got high, low, where's premium? There. What's above premium? That 2 minute fair value gap and that 1 minute fair value gap. So any opposing candles within that price delivery in a low resistance run will support price higher. Obviously in here you would have got chopped around a bit, but once price starts spooling, this is more hindsight, this is more pattern recognition, but you see that expansion profile. Right, and you do that until a down close candle. Maybe look to this high, for example. So let's just keep doing it for a minute. Like, I'm not saying we're going to this high, because if we're bearish, we might not. But like, this is just. What I'd rather is a series of down close there. But And then, for example, on the lower time frame, I'm monitoring when are we creating a low. So see how we respond at this low. See how we respond to these up close candles. Do we continue expanding above them? Any down close candle which forms here, there, do we expand away from them? Down close candle, do we expand away from them? Right? Down close candle, touched it in there. What are we doing? Creating this. Again, this is a 1 second chart, so there's an inefficiency here on a lower time frame. So mark that volume balance, and then we trade through it. So order flow is not fully bullish. But you see that price run to there, right? Like how opposing candles support price higher. And now here, what I'm monitoring is our opposing candles supporting price higher once we close above them, right? These are just low resistance price runs, so just monitor them. Down close candle, we trade under, so that's the invalidation. I don't want to get it too confusing, but again, this is a 1 second chart, right? But like, I'm just trying to. So you can see on a 15 second overlapping. So now monitor the reaction out of here. We closed over this down close, this up close or down close candle, and then came back instantly beneath it. That's a stop out for me, or a trail partial, or I would just close the position. Then once we trade into a lower discount, for example, there, then I would be monitoring how opposing candles are supporting price higher up until these relative equal highs. If we are, I'm gonna stay on there. I'm not gonna go on 1 second. So we haven't closed over any down close candles yet. Up close candle there. On the lower time frame, it's still very wicky. They're opposing candles, but we're not closing nicely. I wanted along that. I was trying to execute in that, but it didn't give me an opposing candle except here, and I didn't like how we were wicking here. I wanted to see us close above 50% and then wick down like that. We never got it. I just wanted to show proof of execution. My average win rate on my live account is about 72% with an average of 1 second. Last time I checked, it was that. Then average RR is 1.8 R live. And then funded is a bit more scuffed because I'm trading it very aggressively. Like, very aggressively. Usually. Risk reward. About, it's near 1.8. It stays around that range. Like, I'm not really looking to go 2R on any trade. Like, today's one was like 1.9. I don't have a lot on there. Leave some of these annotations because we're going to be choppy. I usually enter in on like a 15-second chart or 5 seconds, but entry model is based on a 1 minute. Easy, I know you can't speak. Sorry. We kind of turned it off for the time being. What does that gotta mean? Chubby. Then you would want to see if we trade how we trade above this high if we continue expanding. Then come back into range. I don't know what's the best video. It's kind of linked in all of them. In when people ask, it's kind of there. The easiest way, like I can share the. 1 second. Of course. This is the best picture. Okay, I can share one. I know I can share one PDF. I don't want to share my actual model PDF because it has literally all my rules on. I can share that one. I'll put this one in chat in a second. But this is the one I'm not going to share. But like this has the bullish example and the bearish example. I'll just put that in chat. But I haven't got one. I'm not going to share. I haven't shown you this one. The other two examples. Then this one is the best understanding of it. Opposing candles. This was when I was calling them order blocks. But opposing candles is easier to explain to newer people. It kind of ignore this a little bit. Like this is copied the same text as that, but opposing candles that appear to support price moving towards a specific target, drawing liquidity. And there's a couple of clips ICT saying that model himself, but obviously not saying it as a model. And then there's some examples. I'll show you that one. Well, I'll share that one and then. No, I wanted that entry. No. I really wanted that entry there. I'll show you what I mean. here, fair value gap, opposing candle. Big unicorn too. Yeah, potentially. Like, for example, in here, if we were trade to a short-term discount, and I know, like, this is really small time frame, short-term discount when every single opposing candle is supporting price higher, like, into equal highs. So, for example, again, like, this is literally just running the account. Stop there. So that's a 10-point stop. Entered here, got literally bottom ticked, or one of my contracts. So it only filled one of the contracts at that level because it was a bottom tick. And then I stopped break even there. I want to see if we can get expansion through the high. So, or I stopped in profit of 2 contracts of that, 6 points, and then lost 1 contract of. So overall profit there, just about, but basically break even. And then long there, below of this fair value gap, wanting some of this to be a breakaway gap. So this isn't technically the model, but then the model plays out after that. This is just using narrative. Right into that high. So I could literally do them all day long. Like, I'm not saying I'm not going to get losses, but like, look at the 10 points, right? And then the winning trade is 18 there. So that's match up to my risk reward. But like, I've shown all the executions of. Whoa. Why has that got me in a trade? What the fuck just happened? It doesn't matter, I don't care, but I don't know why it's got me in a short there. It's fine. Don't really care. So ignore that execution because I didn't even press anything. Well, I don't think I did. But them trades, them shorts that we were in, the little long I was with reliable, and then the shorts at reliable also caught here. So I just lost 12 points doing nothing. Great. But yeah. I'm going to head off in a minute because that's the run to that buy side and the expansion over. You can see how that starts with a immediate rebalance on a 1 minute in here. Yeah, and opposing candles. Notice in this entire range, technically we didn't close over and down close candle, we traded above, for example there. Just this one we did, but it's encapsulated off the range of here, so. And then we closed above here, and then we spool. So that's your breaker, that's your balanced price range, that's your 2022 model, that's the immediate rebalance. Yeah. So this is final P&L, and that's me done for the day. It was at 1,100, but I accidentally took that short a minute ago, or I don't know how it executed. But yeah. And 1 winning trade on my live account. So that's that. This